Today, January 8th, Nvidia stock made a new 52-week high, and we detected unusual options activity. And so in this video, we will analyze what this could mean for Nvidia stock. Will it continue to move higher or will it pull back? Now, before we go on to the data from today, we did want to follow up on our last Nvidia video that we published when we detected some unusual options activity. It was on December 18, on this day, when Nvidia was trading at about $500. We published this video here, okay, on December 18. The title of the video is here, where we analyze unusual options activity that was bearish. And these options expired January 5th. You can see this here. These January 5th, that was on the last trading day last week, Friday. And so very interesting, okay, because we had analyzed these 9 million options, which was bearish. You can see that this trader is now profitable because Nvidia never broke this price level on January 5th. Okay, so this was a accurate prediction of Nvidia. You can see on January 5th, we were still under $500, $490 on January 5th. So that video was able to predict the stock on Nvidia for the past few weeks. Okay, so if you want to learn how we use our strategies, our analyses, make sure to watch this December 18 video on Nvidia. We'll put a link at the top here and also at the end of this video. So let's get to the data from today to find out, is it going to still be bearish now that we made a new high, or is it now bullish? So for today's data, the options time and sales tape at 11:05, 53-second mark, we have these trades 2,100, and then we had a 1,881 for the January 19th. So what is going on? Let's take a look first at the January 19th. That's 1,881 contracts for the 505 strike price. So over here we can see the 505 open interest 11,000. That's much greater than the 1,800. There is a higher probability that this is a closing trade where they were taking profits, selling the 505 strike calls, and they were rolling to the Februaries. You can see here the 450 strike puts, the 520 strike calls, and the 530 strike calls. So let's take a look at February 16. This is 39 days away. We can see here the 520 strike calls right over here, and the 530 strike calls right here. Now the open interest is slightly greater than the 2,100 for both of the strikes. However, the volume is 6,400 on both strikes. So we believe there is a high probability that these are opening trades, okay, in which they were buying the 520 and selling the 530. And based on the prices, we can see what they paid. So the 520, they paid 21.17, which is 2,117 per contract, and they sold the 530s for 16.87. So each of these call spreads was $430. That's how much they paid. So let's go back to this. 430 is what they paid. And then we have the 450 strike price puts as well. So let's take a look at that. Here we are, 450 strike puts. We have an open interest of 4,355 and a volume of about 5,000. So what is going on here? If we take a look at the puts, also 2,100, right? We believe that the 450 strike puts, there's a higher probability that these were being sold to open. And so this is their trade. They were collecting a credit of 387. And you can see here, this is what their trade looks like. Okay. By having these puts that they sold, here we will watch the Greeks without the puts. We have, with the vertical call spread alone, we have a 7 delta, nearly 0 theta, negative vega, nearly a 0 gamma. Now look what happens when we add these puts in. We still have a positive delta, but we have a 13 theta and a negative 30 delta. So by selling those puts, they've increased their theta to make the risk essentially on the time decay non-existent. It's a positive theta. So through time, this trade gains in value. So you can see that they've essentially reduced their risk on this trade, right? They're selling these puts at 387 to essentially pay for this debit of 430. And that is why if Nvidia were to drop at expiration, you can see all the way at 450, this blue line is essentially flat and right at 0. So essentially saying they are not going to lose any money if Nvidia drops to 450 at expiration. The 0 line is the profit loss line. Anything above it, if the lines are above it, that's gain. If it's below, that is a loss. So here is a loss here, and these are gains. Okay, so you can see here that if Nvidia continues to rise, there continues to be profits. And so this trader who has spent quite a lot of capital, because by selling those 450 strike puts, they're essentially saying they're willing to own 100 shares of Nvidia at 450. That is $45,000 per contract that they sell. And we know they sold 2,100 contracts. So this trade was $94.5 million. Okay. So very wealthy investor who put on this trade. However, if we want to trade this, take note that this trade can drop, and this investor can be wrong all the way to 450. Nvidia can drop all the way to 450. That's all the way down here. And this wealthy investor will not lose any money. So that is why this trade, if we were to follow this trade, is not a very high probability of profit trade if we wanted to go bullish. Right? Even though the net delta is a positive, it is a long bullish trade, it is not a very high probability, because this trader is also telling us that if they're wrong, which they could be, which is why they wanted to hedge in this way of this kind of a strategy, well, to them, they won't lose any money. But if we trade it, we could lose. Right? If we go out and buy vertical call spreads, that's very bullish. So we have to be very careful. All right? So that is why if you want to trade based on unusual options activity with this type of analysis and data, you have to find the right stocks to trade, because there are other types of data where we can find a higher probability of profit. And we trade based on that type of data and those traders where we feel that they know something and they believe they know something more than many of us do. And if they do not hedge, then that increases our probability of profit, because that means they're willing to risk even more. They must know something if they are willing to risk even more. This trader isn't willing to risk as much. Okay? All right. And so if you are interested in those higher probability of profit trades where we share to our members only, then go to our website. We'll put a link here on how you can gain access to those stock picks that we analyze and we share with our members only. And make sure to watch this December 18 video on Nvidia, the last one we made, if you want to learn more about how we use this analysis to predict stock price movements to beat the market. As usual, please smash the like button, subscribe if you haven't, and have a great day.